Good afternoon, and happy rainy Tuesday. I'm Crystal Gunn. Um, I'm Crystal Gunn, your financial strategist, small business advisor, and life insurance agent. And thank you for joining me for another office hours training. You know, I absolutely love what I do. And I think the biggest part of my job that I love the most is to help you to have aha moments. Yep, we're going to create a solid foundation. Yep, we're going to get you the life insurance coverage that you need. Yep, we're going to create a business strategy for you. But it's those aha moments, those self discovery moments, and helping you see what no longer serves you so that you can release them and soar. All that helps with the magic, the breakthroughs. That's where you start to shift. That's where that magic happens, be it on your personal finances and your overall business. And that's, I think, the part that I love the most. I always say the numbers are easy, but it's that growth. I literally was on with a client this morning, and she said, we got into the deeper side other than finances again, right? And she said, this is about supposed to be about finance. And I said, well, it is about finance. I says, but so much of finance is who you are. So much of your financial relationship is who you are, the thoughts, the beliefs, the things, the habits, the actions, and it impacts your finances. And so we got to dig into that as well. And she was like, you always made me cry. And I said, well, if we're doing something and we're talking about something that hits you and brings tears, that means we need to stay there for a minute because there's something there. And that's where you start to heal. And yeah, I lead with finances, but it's so much more. So I don't know, just side note, I absolutely love what I do. I absolutely love this. I absolutely love the breakthroughs that people have on the personal side because they impact their finances. I always say when you redefine your personal financial relationship, every other area in your life is positively impacted because those same things that are showing up that's negatively impacting your financial relationship are showing up everywhere else too and negatively impacting all of those other areas of your life. I just so happen to lead with finances. But anyway, so last week I talked about the importance of life insurance and overcoming the historical, social, economic barriers and the generational impact. And I told you on Thursday that August was going to be dedicated to life insurance because it's so very important. And so this week we started digging into, well, yesterday, we started digging into some misconceptions, why they exist, and to educate you a little more on life insurance because the more you know, the more you grow, right? And show you how affordable it can be and how we can connect and get you adequate coverage because where there are more people in our community that have life insurance, there's still a huge portion that doesn't, and then there's still an even bigger portion that's underinsured. They don't have adequate coverage. And so um again, yesterday I started talking about the misconception, with the first misconception being that life insurance is expensive. So go back and watch yesterday's episode. And I'm going to encourage you, no matter where you come in on these episodes today, when I'm talking about misconceptions, that you go back and you watch the ones that you missed so that you can start to wrap your head around that, because it's going to make some things really clear for you and understand the power of it, and of its meaning of life insurance. So many people believe that life insurance is something you need when you get older. So part of it stems from the idea that older individuals are more likely to have dependents and financial obligations, and that's just not the case. Especially when you look at things now, people are having children younger, right? And all of that is true. Older people typically have more dependents and have maybe other and or bigger financial obligations. But young folks have that same thing. They have the dependents, they have the financial obligations, they have all of those things. So there's also a perception that younger people are invincible and don't need to worry about such things yet. Very much not the case. Very, very much not true. So when you look at the fact that life insurance premiums are based on age, health, lifestyle, policy amount, policy type, and amount, it makes sense that the younger you are, the lower your premiums would be, right? And so we talk about building that generational wealth and building what's wealth in general. Well, life insurance is a great tool for that. So I had a couple of clients that I ran some illustrations from, and we're going to talk about these just for examples and educational purposes, and just so that you can kind of see the difference. So, talked to a client, had a granddaughter, age 2, and she wanted to do some sort of permanent policy and start doing something for her granddaughter. And I says, well, let's talk about an index universal life policy, perhaps, right? And so we did that at just $100K death benefit, but increasing death benefit at $100,000. By age 22, with the death benefit was now 106, and the cash value was just around $6,000. By 32, the death benefit was 114,000, the cash value was around 14,000, and this was only paying $25 per month. So that she wasn't overfunding it, she wasn't doing any of that, just simply paying $25 per month. And I know somebody is saying, okay, well, by the age of 22, her just having $6,000, but there's no bank account that you can put $25 a month in and have $6,000 by in 22 years. There's just not, right? And I bring this one up because a lot of times people say, well, I can't afford to get a policy on my child. It's $25 a month. You below $25 a month and you don't know where it went. And so being intentional about it and trying to set your child up, because here's the other thing, that's $25 now, but maybe in a year from now, you can put $50 a month. Maybe in a year after that, you can do $100 a month, right? And then this child gets 18 or 21, and now they have a job. They can then turn around and put $100 a month or $150 a month. So it starts, you're putting more in it, you're overfunding it, meaning that cash value is also growing at a rapid rate. So to say that you don't have the money to do something for your child, right? And most people are, those same people that say, well, I don't have, I can't afford a policy for my child. Well, you can, right? I just showed you how inexpensive that is. Now, on the flip side, let's say, nope, I really want to go hard in the paint for my child. Another client, son, age 2, he did a $500,000 policy. By age 22 on the illustration, he had $54,000 in cash value. And this wasn't from overfunding it either, right? This was just paying the $181 a month. Right? At age 32, the illustration showed he had about $150K in cash value, and the death benefit had increased to $620,000, right? So again, setting your kid up for success. So that kid, say at 32, they may want to start a business. Well, guess what? They had $150,000 in cash value to be able to pull out and borrow against in order to do that. So it doesn't matter where you start for your child. You just need to start, especially for your child. And the younger you are yourself, the better. Waiting until, you're older, there may now be disease, high blood pressure, diabetes, because we know these things are rampant rather in our community. The younger you are, the better. It doesn't mean when you get old or older that you still don't look into a policy, but understanding that life insurance is expensive and or is only for older people. It's just not the case. The younger you are, the better. It allows you to build more wealth. And keep in mind, this information and these illustrations were just for educational purposes only. And to get numbers for you and your child, you need to give me a call so we can do an illustration. But it shows you the power of getting life insurance at a young age, as young as you can. So, life insurance is not just for old people, right? Because again, we have to get past this concept that life insurance is just about that death benefit. Yes, that's the first reason. But there's so much more power in life insurance and having the right life insurance policies that we have to pay attention to that. Life insurance is a necessity. And when I talk about getting your financial house in order, life insurance is part of that. Leaving your loved ones without your income or trying to figure out how to pay for a funeral is irresponsible. And think about it. When we have children, we're typically younger, right? I had my daughter when I was 32. So people, now between the age, so much more now between the ages of 18 and 32 or 18 and 30, that's when you're having children. Well, that's where you're usually at your healthiest. That's when you're usually at your thinnest. That's when you're usually and that's definitely when policies are going to be less expensive. So that's when you need to, if you didn't already have one, that's when you need to make sure that you're getting one, because now this is, and on a permanent policy, this is your premium. Right? If you start waiting till you're older, now it's going to be more expensive. But guess what? Even if you were older, so me and my spouse, my husband, we had a dependent at the age of 33, 32, right? So it wasn't she became a dependent when we were 50. We had her when we were in our early 30s. And again, because it's that premium is also based on age, the time to get the life insurance is younger. So also if you're a grandparent, like I had the one client who wanted something for her granddaughter. And I told her, I said, yeah, $100,000 should be enough for you. Let her parents get the $500,000 one or the $250,000 one, right? But you're doing something. And a lot of times I spoke with a lady at an event one day and she was getting insurance for her grandkids because she couldn't even talk to her daughter about life insurance. Her daughter never, ever wanted to have the conversation. And she says, because she won't even have this conversation, I have to make sure these kids are taken care of. Right. So it's so many things, and it's that we don't want to have a conversation about, or we don't even want to think about. But life is going to happen the way that it happens. And so to have a conversation once or twice a year about a thing to set your family up for success is really worth it, especially when you talk about you love your family. So when you talk about you love your family, the least you can do is have adequate life insurance coverage. I think that's the least you can do, right? And so going back to talking about that 2053 prediction of Blacks having zero wealth, getting your financial house in order is how we ensure that that prediction doesn't become reality. And 2053 is only 29 years away. So we can't wait until 2050 to start working on our finances. We have to start today. We talk about building that generational wealth. Well, life insurance is one of those tools that you can do so. You also hear people talk about real estate is another way, right? So we talk about breaking generational curses. And if the curse is going to stop with you, then the new systems of success must start with you. You have to get the tools in order to create those new systems of success and pass down that generational wealth. So misconception number 2, life insurance is only for older people. That's a lie. Don't fall for that one. And please stop believing that one, right? So what is my favorite thing for today? It's going to be the same all month long. It's life insurance, the power of it. It's absolutely powerful and necessary. Again, you might say, you know what? I don't want to leave my grown kids nothing. They fine. Okay, but they shouldn't have to pay for your funeral. So at least get coverage enough to cover that, right? Especially if you say, "Oh, I love my kids." Okay, right? So life insurance, my favorite thing. So what are the next things we're about to do? Again, getting your house in order is a process. Your financial house in order is a process. You're not going to be able to do it all at one time. You're just you're not, right? Because there's so many things that most people are missing, and it's not an attack on you. Most people are missing the things because we're not educated on the things, because it's not taught in schools. Your parents may not know because it wasn't taught in school when they were in school, or they didn't have access to it, right? We talked about the historical context of why our financial houses look the way that they look, right? Or they don't show up for the information. So if you're watching this today, bravo, because you showed up and you listened to this information. Now that next step is to move into that next step. So complete the life insurance calculator to see how much coverage you should have. It's going to ask you 3 or 4 questions. You simple questions too. And you'll look and you'll see how much coverage you should have. And then you compare that to how much coverage you actually have. And if there's a gap, you're going to schedule a free consultation with me. Let's discuss options. Let's discuss what you want out of life so that we can talk about ways to protect the different things. Do you have a mortgage? Well, let's protect that mortgage. Let's protect your income. If you die, let's leave some stuff for your children. And then let's fill in the gaps with the coverage and get your children insured also. Because again, remember, the younger you are, like, these super young kid policies, it's not a whole bunch of hoops to jump through, right? So what are you waiting for? Fill in the gaps, get the coverage that you need. And remember, I always say, even when you go back and you look and you see how much life insurance you need on doing the insurance calculator, when you're calculating how much insurance you currently have, what's your current coverage, don't include the coverage that you have from your employer, right? This is what you need outside of that employer. Because if that employer goes under, if you get fired, if you quit, most people when they leave an employer don't take their insurance with them, right? Or it may become more expensive. So it's all of those things. So I always look at the coverage that you have on your job is better than having nothing. However, that's the and one. That's the extra point that you have. So don't include that when you're trying to figure out how much you need. And it's not about me trying to get you to get more insurance. It's about thinking through a process and saying, again, what happens if this company folds that I work for? What happens if I get laid off? All of those things come into play. It's better than nothing having that coverage through your job, but that minimum should not be your maximum. Okay. So again, the consultations are below. The link for the consultation is below in the description. Schedule yours today. Doesn't matter where you are in the US. I can take care of you with that, but let's start to have the conversation so that you can understand the importance and what you want to accomplish in life for yourself, what you want for your children, your family, and of course, the next generations that follow. If this information has been helpful, please do me a favor, share it, subscribe to the channel, turn notifications on so that you don't miss a beat. Again, I will be talking about life insurance on some form of fashion all month long because of the importance of it. And share this information with someone else. You never know what they're looking for. You never know what they've been praying for. You never know what they need, right? Don't be the gatekeeper of helping somebody else get their financial house in order. And I'm going to show this time and time again because the trouble is you think that you have time and you don't. And you look up and now you're 40 and you want to get some life insurance and it's really, really expensive, right? And so we can get you something, but we can't get you what we could have gotten you at a lower price, which could have helped build more wealth and more generational wealth. But you still need to have the insurance, right? So time is of the essence. And tomorrow is never, ever promised. It's a whole bunch of people that didn't wake up today some people that have gotten into fatal car accidents. It's some people that are still not with us today that were here yesterday, right? And we always think that we have more time. So let's do the things that we do so that when we say, oh, yeah, I love my family. Oh, yeah, I love my child. Oh, yeah, I love my spouse. Oh, yeah, I want to build generational wealth for the next generation. Well, what are we going to do in order to ensure that that happens? What are we going to do to ensure our loved ones are taken care of? And remember to always give yourself some grace. Keep striving for your next level and for the next level of your family. Never give up on you. Never give up on your family. Invest in you. Stop looking at things that are for protection and that are for building wealth. Stop looking at the premiums or the cost as an expense and look at it as an investment in you, in your children, and in the generations that follow you. I promise you, you will never, ever regret it. Thank you so much for joining me today, and I will see you on the other side. Thank you for watching. I appreciate your time. Be sure to join me for the private online Q&A immediately following. The link is in the description. And if you haven't done so already, please be sure to subscribe to my channel and turn notifications on so you never miss this opportunity. Thank you again, and I will see you